Good morning, traders. It is 8:02 a.m. Chicago time on Friday. Happy Friday, everyone. August 18th, 2023. This is episode number 2519. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So here we go. The Convergent Trading pre-market summary sheet giving us a recap of what the market posture is and what we've done overnight. And what this sheet is showing is that we're definitely in a risk-off sentiment. The markets are gapping down in the U.S. versus the prior RTH session. The S&P is down 25.5 points. Pretty decent range overnight. The Nasdaq's off 125 and the Dow taking a hit here at 156 points. We're seeing the same, the DAX being off. The main drivers this morning are China's Evergrande, which is just a gigantic real estate developer. Has filed for Chapter 15 bankruptcy in New York to protect its U.S. assets. This company has about $19 billion in debt. And the overall narrative here has been China. China did not reopen the way the market expected. We got an AI boost, which helped push us quite far at the beginning of the year. Pretty good returns. Then China's slump caused a drop in commodities. The expectation is because of China's slump, we would look for some sort of stimulus. The market was disappointed, was continuously disappointed by the fact that the Chinese government's not doing anything for stimulus. And we have known that these real estate companies are way overextended. The other one, the other firm that has been stuck its neck out is actually a trust company that was in the Wall Street Journal. They have already defaulted on payments. So the idea here is with Evergrande filing for Chapter 15, with these trust companies missing payments, there's probably a lot of rot in that sector, and there's probably going to be more and more fallout from China's real estate sector. So that's really difficult for the market to ignore. And so we're seeing movement in treasuries and so on across the board. PBOC reportedly stepped up yuan intervention. Bitcoin down sharply with some contributing drop to Wall Street Journal report that SpaceX wrote down value of its Bitcoin holdings by $373 million. You can see that Bitcoin has dropped about $6,000 over the last, 3 weeks, month or so. Jackson Hole Economic Symposium next week. Japanese CPI came out this morning higher than expected. The core was in line. This is more inflation data. Retail sales out of Great Britain came in pretty weak, down 1.2% versus negative 0.5% expected. The prior is positive 0.6, so we've had almost 2% swing down in retail sales in Great Britain. Inflation in the Eurozone is in line. And then we looked at PPI out of Canada, came in pretty relatively strong, was expected at negative 2.3 month on month, came in at 0.4 positive, and year on year expected at negative 6.3% on the PPI, came in at negative 2.7, so quite a bit stronger. There's not much on deck for today, just the Baker Hughes rig count, all rig count at 1 o'clock. Looking at the S&P is in a double distribution trend-like profile. This is this is kind of the inverse of what we saw yesterday. And we're in pretty aggressive price discovery. We've pulled all the way down into the 43.50 area, the low of 43.53 and a quarter, which is actually a stock zone. There's a naked point of control at 43.50.75, and we have a very distinct low volume node in today's double distribution, the overnight double distribution profile in the S&P, and that price is somewhere between 43.69 and 43.71. So that's going to be our first area to monitor. We're bouncing a little bit, but we have a relatively weak low. The volume has been pretty strong overnight, 252,000. The inventory is 58% short, so nothing too skewed. The range is 37 points so far. So here's what we talked about yesterday. Let me pull that up. This is from yesterday's Trader Bite. I had talked about the importance of 44.20 in the S&P being the lower MC point of control, and the idea is that we have come to this area, and the expectation is that we would likely chop, if not bounce, from this area. We saw in the order flow and the way the market was trading in Wednesday's session that although it successfully pushed down to 44.20, which was our key target, it went to 18.5 on the low. The move down really contested. A lot of absorption from the bid, just really struggling to keep price down. Now, Delta has been speaking very clearly that the aggressors on the sell side. But what we've noticed is that it floats up really quick, and to me that is a very, unfortunately, noisy, potentially inaccurate short-term indication that that the sellers are likely to be squeezed, and I've been wrong about that. So yesterday the expectation is we would open around 44.30-ish, test up into the prior day's kind of boxy, bulky profile, and then make our way back to 44.20. The primary idea, though, was that we would likely squeeze back up to 44.50 and hold steady between 44.50 and 44.60, potentially take out the 44.65, at which point I'm expecting a squeeze back to 44.90. Completely wrong, that primary scenario. We don't have evidence of that in the technicals, really, at the moment. I'm getting ahead of myself because I'm seeing a weak high right here at 44.65. I'm seeing a weak high, and I'm seeing the market contesting the move down in what is a very bulky, kind of choppy profile. The secondary scenario is that we would test up to the 44.40 area and then push down into the 43.85. You can see that on the screen from yesterday's video, and that was correct. That was the play. Here's what actually happened. There it is. We open up at 33. We open up at 33. Very little in terms of an attempt to push higher. We immediately get below the day references, the VWAP, the mid, and so on. And you could see us really struggling to get continuation. So we got a pretty good impulse down. And I found it very difficult to kind of sit through this first hour of absolute chop. And when it finally broke the IB, it ended up pushing back pretty deep, right back into VWAP mid before releasing to the downside. This is not an ideal type of trade for me. I find that to be very difficult to kind of read. The push up gave us an impulse here. This is an impulse up, so I'm not really gung-ho about leaning against the mid and VWAP in this situation with the point of control right in the area. Not an ideal situation. It ends up pushing back through the IB low, going all the way back up, and then we finally give it up to the downside when at about 1 o'clock Chicago time, when nothing usually is going on. So as you can see, the market pushing lower just brings in this absorption. This red here is somebody hitting the bid with 100 lot or better, or multiple 100 lots, and that bid absorbing that size. And holding through that is not that easy. Once it does break and we have a collision like this, I have a scalp set up to trade that collision, and that trade would be the collision against the prior lows from over here, with a relatively wide stop at 44.1516, and that would get us in this area right here. And then we have this kind of rotational move down where we're zigzagging. The down rotations are bigger than the up rotations, and it finally facilitates itself down into the 43.85. So there's the 43.85 right here, and we ended up settling at 43.84 and a half. So we settled 2 ticks below that key target. Again, we are through 44.20. We didn't spend very much time there, which is surprising. I expected a little more chop back and forth given the size of this area. I'll show you where that comes from. The 44.20, there it is. So the 44.90, 85 area, that's the area we've kind of been sitting in. Okay, that's the area we broke away from. So we gapped down and we ran to this 90, 93, really 85 to 93 area. We paused up here. This is an old high. And we consolidated here and traded pretty well. We could see we built some pretty decent volume profiles, and then we started to move away. And as I said, once we've moved away and broken that 59 low, the 44.59 low, now we're looking for 44.20 right there. See that prominent MC point of control, 44.20. And the expectation is we would come to 44.20, bounce around, potentially push higher, chop through. We see this as an acceptance area. Yesterday, it didn't really do that. It opened at 44.33, and it held this area for some time. We formed basically a high volume node up there at 44.26-ish was the point of control of yesterday. And then it just broke away, and now we're at 43.85 on the close, and then we managed to push to 43.50. So this is a lot more directional than I had expected. So I was wrong about the idea that the technicals will indicate that it's very likely to hold and then bounce the 44.20, recheck the 60-65 area, potentially back to 90, and then we get to decide, do we push back up on good news or do we push back down? It just did not have it in it. And a lot of that is driven by, be as technical as you want. Many people don't believe in technical analysis. They think it's like a superstition or something. But the fact is, many people, I think, are making a living off of it. And the technical analysis using volume profiling, market profiling, the auction tells you what the story is. And I'm trying to anticipate from where we are what the next move is. And I'm sharing that with you with the caveat that I don't know. Nobody knows. So at the moment, we're working through each one of these support resistance levels that you see on here, which I mark at the beginning of every month and adjust throughout the month. And we've worked ourselves down into 43.85, and now we're even below that. But again, nothing trumps fundamental news. I mean, there's nothing that trumps economic news, such as, a major real estate firm out of China declaring bankruptcy. And if a major firm like this is declaring bankruptcy, what about all those other ones that are very quiet and flying under the radar? And that's what the market's pricing in. It's a little frothy, I think. It's become a little bit extended in terms of the selling. And we are underneath that 44.93, this really important area right up here. and we are sandwiched. Let me show you the composite. Here we go. This is the composite. Let me release this. Come on. So we are sandwiched below the 44.93 right in here and this all important 42.70 area. So we're really in this zone, and we are trading right in here. I'm expecting today to be relatively choppy. We are opening in a gap. I'm expecting some responsive buying. Again, my view is that this is somewhat extended, but trade what you see on the chart, not your opinion or mine. I'm going to sit out probably the first bracket, the first 30 minutes. The first 30 minutes. This is monthly option expiration. This is the third Friday of the month. There's some influence in that. Statistically speaking, there tends to be a slight positive skew. Not sure how it's going to play out this month, but you know, gamma exposure is going to be important today, and it's overall there's just a lot to feed into the narrative that there's a high potential of chop today. I'm going to see, so my plan for today is very simple. I'm going to look to see how the market responds to the gap. So it's a gap day, gap rules apply. We want to see how does it respond to the gap, and what does it do to get back into or move back towards yesterday's low, 43.78. Does it push through the full session VWAP, full session mid, and work itself back up? We do have the overnight point of control shifting to the low of the range. We do have a relatively weak low at the moment, so I'm expecting the overnight low to be taken out for the overnight stat. But I'm going to tell you, it's a coin toss. Right where we are here, it's a coin toss. I don't see myself aggressively short, and I don't see myself aggressively long either. So I'm just going to wait and see how the market responds on the open. A lot of business is likely to be done on the open today. We have additional extra risk exposure that the market has already priced in, and others will have to price in. There's an impact to a very large sector of the economy, being real estate, REITs, and things like that. So I'm just going to let that kind of clear itself before I decide to stick my neck out and put money on the line. So this is what I'm looking at for today. Looking at the TPO chart, we do have some single prints above us back into this 4,400 area, 4402 really. This becomes the 60 points, 40 points away. This becomes, once we get into the range, if we get into the range today, this becomes the key target up above 4,400, 4402. If not, then we are really pushing. We are pushing the narrative down into the 43, this area right here, 43.35. This area down here, that would be the next key area to test. 43.33, 33.35. We're at 59. Otherwise, we're looking for it to come right back into this 4,400, 4402. We're opening right in the middle, and we have a gap this morning. The NQ is in the same situation. Let's erase this. There's, by the way, you may be noticing based on my comments that there's just not a lot of clarity today. It's really tough to get some clarity this morning as to what this thing is trying to do. But the NQ is in the same situation. We're opening in a gap, and I'm just going to wait for it to see if it comes all the way back into this area right here. If we regain yesterday's range, I'm looking for 855, 860 as a key target above. Otherwise, it is wide open to continue to push lower. Let me undo that. To continue to push lower, we're looking at 14,600 just below. We went to 14,630. It's just hard for me to say what's what. The NQ is not coming off its lows at all. I don't have much more to say about that. Remember that crude rolled today. Crude is trading October, the V contract. The premium difference is a discount of 49 cents, 49 cents, which is quite a bit of a discount, which means you have to adjust all your charts, back adjust all your charts by 49 cents down. Crude is flirting with that $80 mark, and yesterday was a, you know, it's the roll, so it's tricky. But this morning we open at the lows and we're responsive in crude. Looks like crude wants to push back to 80.75 or so. Um, it's Friday. It's not a great day to stick your neck out too far. It is not a great day to burn a hole in your pocket or get emotional. Just be aware that the market's going to do what it's going to do. Your job is to only stick your neck out when you have an edge, which means that the probabilities of you getting paid are better than you losing in the long run. For every trade, we don't know what that probability is. In fact, the outcome is always 50-50, but today is not the day to try to force trades or try to, catch the bottom or call a turn or whatever. It's Friday. It's better to go into the weekend not having done anything than to go in with a large loss. Good luck.